Hello, everyone. My name is Barbara Armstrong. I'm a coach with Schwab and delighted that you have chosen to join me for this short trade management mini session. We placed 3 trades on the same stock on the same day. The example stock was General Motors or GM. The example trades were a stock purchase with a swing target, a long call with a swing target, and then a short put vertical. So today we are going to take a few minutes and look at how those 3 trades turned out. If you are not following me on X, consider this your invitation to do so. My handle is @BarbArmstrongCS. And just before we get started, know that options carry a high level of risk and aren't suitable for all investors. We use the paperMoney software application for these examples on the thinkorswim desktop platform. It's a brilliant place to learn and become familiar with trading strategies and how to use the platform. But there are some nuances and differences. The most important one for these examples is that in paperMoney, a short option will never be assigned early, and that can happen in a live trading account. Okay, let's get right over to the platform. And I'm going to start by coming out to the charts. And so on November 1st, we looked at this stock, and if we back things up a little bit, we can see that we had this inverted head and shoulders pattern that had occurred on the chart. And so we looked at this and said, hey, it has broken out and come back to retest. And then on the particular day we entered the trades, we had this harami pattern happening. And so we looked at this and thought, could we place a bullish trade? And what type of bullish trade might we place? And we decided to place 3 trades and then compare them. And so that's what we did. As it turned out, we exited all 3 positions on the same day, November 6th. So the swing target was $54, which was close to the previous high. And on the 6th, it gapped up, so we got out at a little higher price on both the stock and the long call. And then our short put vertical strikes were at 50 and 49, and we ended up hitting our target to exit when we had 80% of our max gain on that day as well. So when we come to the monitor tab, and I just went back 8 days, that shows us these trades on the 1st. How might we look at these, in hindsight? And so let's take a moment. I'm going to bring up my drawing tool, and we're going to look at these 3 trades, and we'll start with the vertical. So as you can see, all 3 of these trades were placed on the 1st, and all 3 of these we exited on the 6th. Okay, so the first one was a short put vertical, and we were paid 32 cents when we got into that trade. So let's start our first column here. That was our short put vertical. And we were paid 32 cents when we got in, and then we bought it back. So here's our short vertical. This was opening the trade, and this was closing the trade. We did 7 contracts. We bought it back for 6 cents. So we got in for 32, and we bought it back for 6 cents, which was 80% of our max gain. And so that turned out to be 26 cents a share, or $26 a contract. So our total dollar gain was $26 a contract times 7 contracts. And that gave us a net gain of, and I'm going to put that down here, $182. Less transaction fees, which I'm not going to take into account for this example. And then what was our return on risk? Well, how much were we risking? Well, we were risking $1 a share, or the difference between the strikes, minus the 32 cents. So we were risking $68 a contract to make our 26. And so that ended up being a return on our risk of about 38%, which is a pretty nice return on a short vertical, for particularly one where we were only in the trade for 5 days. And so that's how that one worked out. Now, what was our risk in total? And I'm just going to put our risk up here at the top. Our risk in total, we were risking $68 a contract times 7 contracts. So our total risk on this trade was $476. Okay, now what about the second trade? Well, the second trade that went in was our stock trade. And here we wanted to we bought 100 shares for $51.20. And then you can see we got out for $54.88. Now that's a higher return than we were looking for, because our target was to get out at 54. And so when we look at our stock, you know, we bought it for $54.88, or sorry, we sold it for $54.88. And then we bought it for $51.20. And so how much did we make? Well, we made $3.68 a share times, so that was our 368 times 100 shares. So we made $368. So we made double what we made on the short vertical. But what was our return on risk? Well, we did have a stop loss in place on this, but a stop isn't guaranteed. Technically speaking, you know, we could have lost $51.20 a share. So if we use that, maybe we want to call this return on investment rather than return on risk. But we made $368 on an investment, or technically a risk, of $51.20. And so we were, you know, our return on that was about 7%. I just want to double check my math on that. 368 divided by 51.20. So that was about 7%. So not nearly as great a return, but if we had said we're going to base our return on risk based on the stop loss order, which was at 48.50, then we were risking $271 a share. We would have said 368, and we're going to subtract divided by 271 a share. It, you know, had we been stopped out, and a stop isn't a guarantee that we'll get out at that price, and this max loss is a theoretical max loss as well. That 368 divided by our 271, that would have been 135% return. So maybe you want to call this, instead of return on risk, return on investment, because that is what we did invest. And if we make our return on risk based on the price of the stop, you know, it looks much more appealing, right? 135%. And I'm not trying to make one type of trade look more favorable than another, but just to show you how a trader might choose to look at it. Now, the third one was our long call, where we opened the trade by buying a call. And we bought our call, again, all of these were on the same day. We bought the 2 contracts, and we paid $1.79 a contract. And then we ended up out of that trade again on the 6th, and we received $3.90. And so if we look at this, we ended up making $3.90. We paid $1.79 to get in. We got out for $3.90. And so we were ahead on the long call by $211 per contract, or $2.11 a share. And we had 2 contracts. And so if we multiply that by 200, that gives us 422. And so it looks like this, turned out to be, winner, winner, chicken dinner, right? The most profitable. Now, this is just in this example. Now, return on our risk. Well, what were we risking? Well, we could have lost this entire amount, even though it was a swing trade and we had to stop in at half the amount. But we could have lost that 179 if we just go with that 100% like we originally did on our stock position, and we made 211. And so our return on this one was 118%. And so what conclusions can we draw from this? Well, if you end up with a really bullish move, the long call gives us the most leverage. But that's just the way this particular situation worked out. It could have been that if the stock had gone nowhere, the short put vertical could have ended up being the most profitable position. And if the long term in the intermediate term it had pulled back, the long call could have expired worthless. The short put could have been compromised, and we might have had to buy out of that at a loss. And longer term, the stock may have been the best decision. So you just have to look at each situation individually. And when you're looking at a strategy, and you look at your technical analysis, you just have to say, here's the strategy that I think might fit the best in this situation. But, without a crystal ball, which none of us actually have, it's impossible to know. But that's how these 3 trades worked out. And this is just an example. The next example could be 3 trades that all were unprofitable, and we might be comparing size of losses, but these 3 worked out in our favor in this example set of trades. I appreciate you tuning in to check this out, and all I can say is keep coming back. These trades were placed in the Trading a Smaller Account class on November 1st. Hope you all have an awesome day. I'll look forward to seeing you in a mini session coming up soon. Take care, everyone. Bye for now.